Welcome to this week's special presentation titled Optimizing Performance with Ruler Stocks. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. Normally, when you hear the Manager of Research talk about optimizing a trading plan or a trading system, you can anticipate what I call a backtest fest, running multiple iterations of a backtest and comparing results to find the optimal combination of settings for best performance. Webster's defines optimize to make as perfect, effective, or functional as possible. By this definition, your optimal solution may be one of simplicity, particularly for more conservative investors or those just getting started in investing. The VectorVest Simple approach to investing is a time-tested winner. In fact, it forms the basis of our trading system we teach in the Successful Investor course and our weekly coaching. The Successful Investor course is all about getting back to the basics of successful investing and taking a simple, steady approach to making gains. Of course, any trading system has many parts, and so we've expanded the VectorVest Simple approach into a full-blown trading system that leverages the natural strengths of the VectorVest system. Let's start by making sure everyone understands the term VectorVest Simple. It's one of the foundational approaches for the prudent to conservative investor who hold their trades for longer periods of time. Here's what Dr. DeLito wrote in his essay back from December 3rd of 2004. He wrote, "Guilty. I admit it, I'm guilty. What with the Unisearch tool and now the auto tester, I'm in search of a killer strategy that makes money no matter what. But isn't VectorVest supposed to help me do that in the first place?" Yes, of course. VectorVest is designed to bring the best stocks to your attention with a single click of the mouse. The best stocks, according to VectorVest, are those ranked highest by VST Vector. On any given day, they have the best combination of value, safety, and timing of all the stocks in the database. So what could be simpler than clicking on Stock Viewer and looking at the top stocks ranked by VST Vector? The odds of picking a stock that's more likely to go up than down are in your favor when you select high VST Vector stocks. Even so, there are ways of increasing the odds of picking winners and avoiding losers when picking high VST stocks. Simply look at the graphs of the top 20 stocks ranked by VST. Favor those with distinctly rising price and earnings per share patterns. Avoid those with excessive volatility and violent drawdowns. It doesn't take long to look at 20 graphs, and it's really easy to do. That's why I call it VectorVest Simple. And it really is simple. If we go to the Viewers tab, let's look at the Stock Viewer. I'll close the toolbar so we can see the data more clearly. By default, we're sorted by VST descending. I have the screen set up to look at the top 20 stocks, and we're going to graph them all. Here's my graph in the VectorVest layout. Let's go to the VectorVest Simple layout. That's where it gets its name. And to set up the graph, we'll look at price and earnings per share on a 1-year time frame. And APPS is a great example of what we're looking for. Bottom left to upper right price action, the smoother the better, driven by bottom left to upper right earnings performance, the smoother the better. We can flip through these 20 graphs in just seconds, and you'll have an instantaneous response because we're visual beings, and you almost intuitively respond to favorable graph patterns. So I'll just flip through them, and you note the ones that you like. LAKE, SNBR, TSLA, REGI, ACTG, MRNA, RVP, UCTT, LOGI, NVAX, AMAT, APT, WMS, GNPX, IMMR, TTGT, CODX, ENPH, FTNT. So some of those looked better than the others, right? So you'll simply pick or cherry pick your favorites. And this is something you can do with any stock. So no matter what the source of the stock tip, plug it into VectorVest, look at the VST analysis, and look at its chart. Is it bottom left to upper right, smoother the better for both price and earnings? Now in the Successful Investor, we use the Stock Viewer, but we also use the Midas Touch watch list in the cherry picking group. And one of my favorite things to do is an easy resort because we have elevated RT values for the top VST stocks in this list, so these are often overextended. A simple resort of the watch list by RS. Stocks with the strongest safety scores come to the top of the list, and their RT value is a little bit less elevated. We can also use the Unisearch tool. One of our perennial favorites, and one of my favorites, is in the Searches Prudent folder, Ruler Stocks. In the comment section, we see that Ruler Stocks find stocks with well above average safety and a growth rate above 14%. These stocks are sorted by RS multiplied by growth rate, which brings the stocks with the best combination of safety and growth to the top of the list. So we see in the parameters we're looking for growth rates in excess of 14%, RS values greater than 1.4, and that we have minimum price and volume requirements here as well, and they need to be on the major exchanges. So when I run this search, so let's graph these candidates. And the idea is with these high RS ratings, if you take a look at the long-term graph, you can put a ruler on those earnings per share graph lines, and that earnings performance drives sustained price performance. So let's zoom back into a 1-year time frame, and we'll just scroll through these and compare the candidates. Again, bottom left, upper right, smoother the better. Some were better than others. So we'll cherry pick from that list, from that offering, the best candidates for our portfolio. In doing so, and I'll use Logitech here as my example, not only have you found consistent performers, but it's easier to manage a portfolio full of these stocks with their high sleep at night factor, right? Because they don't make wild gyrations in price action that keep you up at night worried about an adverse move. So with these great candidates as our core, let's see how they perform over time with a very basic trading system that tells us when to buy, what to buy, and when to sell. That's a job for the backtester. So come to the backtester tab. I like to say the backtester is my what-if machine. So let's click backtest an idea. It'll give me a rough idea of a trading system's performance over a historical time period to demonstrate potential and optimize my trading rules over that time frame. It doesn't predict the future. It helps me navigate the past to put probabilities on my side for future success. So let's build a custom trading system. And if you have the auto timer module, we'll preload for you our market timing signals. And they're all good in their own right. In the Successful Investor, we use the green light buyer signal. So we'll buy stocks when there's a green light in the price column of the color guard. And we're going to actually hold those stocks we buy through any down or neutral signals. Let's start with our automation rules for the up situation. So when we get that green light, we're going to fill our portfolio with stocks from the Searches Prudent folder and Ruler Stocks. And I'm going to skip for the moment to the More Settings tab because how we buy those stocks has an impact on how we sell them. So we're going to have a 10 stock portfolio, so we're going to evenly distribute our funds across 10 positions. And I'm only going to replace positions or buy new positions on successive green lights. And I'm only going to buy 2 stocks at a time. This helps me spread my risk of a reversal in the market by spreading my risk over time, as opposed to buying all 10 stocks on the first green light. When I enter this position, when the light turns green, now remember it can go from green to yellow back to green, so I don't want to close any of my open positions. I'll invest the average value of the portfolio into each position, which means I'll buy odd lots to maximize the investment in each position. And we're going to limit ourselves to just 2 stocks in any single industry. This helps me diversify risk across the portfolio by not getting overloaded in any one particular industry. So that's how we're going to buy. For the stop criteria, we're just going to use our recommendation equals sell. Come to the bottom, we'll click Next. Automation rules for when we get a down signal, which in the Greenlight Buyer system is a confirmed down call, we'll take no action, which means we'll hold through the down signal, just letting the stops manage the positions that are in the portfolio. And when we have neutral signals, again, we'll take no action. So let's click Finish. And let's give this a name. I like to assign names so I can keep track of the settings in the test. So we'll call this Ruler Stocks Rec equals sell. And I just noticed this account is assigning a $4.95 commission. Let's go into the account settings. And I can uncheck pay commission because very few of us are paying commissions anymore. And I'll click OK. Now for my date range that I want to test, let's go back to our test period button here. I'll open the calendar and let's run this over the last 5 years. So I'll click on the date, 2016, February 4th. Running to current, I'll click OK. And now I'll click Finish and Run. We see the transactions taking place on the left-hand panel. We're forming our equity curve and we're overlaying the timing signals on the graph. Let me clean that up a little bit. Looking at the performance summary, we see that we had 54% winning trades, an overall gain of 126.84%, so we doubled our money in the 5 years. The average annualized rate of return at 25% with a maximum drawdown of 25%. Look at the equity curve. The first thing I notice is we are hitting a series of higher highs, so we like that. But we did have 2 large pullbacks, those max drawdowns. The biggest of the drawdowns was 25%. Looks like this one back here in the Christmas correction of 2018. So in the overview, we have steadily rising equity, a nice reflection of these high quality stocks being given room to run and holding through the minor pullbacks. That same latitude, however, in a correction results in a bigger drawdown. Let me show you. I'm going to move our date line back to this peak. If I hit the run button, the backtester will rewind to that date. And now let me look at the holdings in the portfolio at that time. And let me close some of these panels so we can see the whole screen. And look at some of these gains. We're sorted gain loss descending, so our biggest gainers at the top of the list are also some of our longest held positions in the backtest, but 10 out of 10 winners into that market peak. And let's take a look at their graphs. I'll tag them all, right click, and view the stock graph. I've opened up the stock graph on a 1-year time frame. The hard right edge is the 1st of October 2018, where the equity curve peaked on our portfolio. Our top performer, Intuitive Surgical, it's a beautiful graph. The VectorVest stop price has done a great job of keeping us in this trade, even through some of the inevitable pullbacks and consolidations. Let's just scroll through the other candidates. And Google, even with its volatility, kept us in the trade. and overall nice price graphs with nice earnings graphs. Now that's the setup because remember, we're just at the peak of the equity curve in the portfolio before we have our biggest pullback over the test period. Next, I want to look at the same charts, but I've zoomed us into a 7-month time frame to give us a better feel for the scale between the current price action and our VectorVest stop price. So Intuitive Surgical, the price is at 574, the stop price at 516, a little over 10% differential between the price and its stop loss. And if I put the recommendation profile indicator at the top of the chart, you can see we're still buy rated, but I'm going to click this arrow and move us forward to demonstrate what can happen to even good stocks in a market correction. So as we move forward, we notice the price starts to pull back. And it isn't until here on the 29th of October that we get the sell rating in the VectorVest system, and in our back test, we actually close the position on the next day's open. And it's this pullback, particularly in corrective markets, where you see that drawdown exhibited in the performance of the stocks. And of course, this pullback is more severe in some stocks than it is in others. So some might say, well, yeah, okay, Todd, but you know what? Even with that pullback, our worst drawdown as we move the back test back to current time frame, our worst drawdown was 25%. And overall, this simple system has done very well over time. If it's not broke, don't fix it. Okay, fair enough. In Successful Investor, we utilize several techniques to help us maintain this steady price increase using the VectorVest stop price, but minimize the drawdown in corrective market action. The first, and I alluded to this when we constructed our back test, is we add to our portfolio in steps to diffuse our risk over time of any reversal in the market. We only buy stocks when the market's rising, and we slow or stop our buying when the markets start topping. This helps us avoid taking the maximum drawdown on the portfolio when the market corrects. We also coach our members to set a line in the sand, set an initial stop loss on every stock in the portfolio to limit the maximum risk on any trade to 1 to 2% of your portfolio value. Now that's a maximum. It can certainly be less. And finally, we make adjustments to that stop loss to raise it as we build up gains in the trade, and we tighten our stops when advised in the VectorVest Views market guidance. And when you think of it that way, that's what we're doing with our rising VectorVest stop price, a trailing stop, if that's what you use, or our self-adjusting profit locker stops. Let me illustrate. Back in our back test, I'll click the Edit button. And if we customize our trading system, we'll go back to our stop criteria. And let's choose instead our profit locker tool. So you can see in our graphic here that the profit locker starts out as a regular trailing stop. The trailing stop moves up with price at a fixed interval. The profit locker stops, though, are dynamic, and they change based on the performance of the price of the stock. And so as we get to break even, the profit locker actually holds break even as the stock continues moving higher, works through some volatility, and as it continues to move higher, then we'll start tightening the stop dynamically as it approaches our profit objective. The prudent enhanced version of that stop, and of course we have all of these default combinations, or you can create your own, but the enhanced version locks in a 5% gain as the base of what we call the belly of the curve. And to see how it performs, it's as simple as just clicking Finish and Run. Looking at our results, we see that our percentage winners dropped from 54 to 46%. Our overall gain dropped from 126 to 118. So the tighter stop truncated some of our winners. Our average annualized rate of return fell from 25% to 23%, but our drawdown also fell from 25 to 16. If we look at our deepest sell-off in that Christmas sell-off of 2018, we actually went to flat lines where the portfolio actually went to cash as our position stopped out. And I'll have you note we did it again here in the COVID collapse of this past year. And again, I think most conservative to prudent investors would be very happy with that kind of performance over time. And of course, the VectorVest Simple approach to investing is a time-tested winner. Perhaps your trading plan could use some enhancing too. We encourage you to try some of these ideas to enhance your trading plan so you too can achieve your optimal performance goals. Thanks for watching.